Now, still in corporate world, Volkswagen says its third quarter operating results was hit by a 2.5 billion euro burden related to increasing settlement provisions. Is this a worrisome news for the automaker's shareholders?
Yes, it is. They are selling the shares, and as this profit warning has to do with higher costs in the United States, of course now many analysts wonder whether this implies that also higher costs for the diesel scandal have to be expected here in Germany. Remember, the car maker was allowed by the German government to implement a new software in those cars where diesel cheating happened. The software solution is cheaper and easier than the hardware solution, which would mean changing the hardware of those engines. But car dealers of Volkswagen here in Germany say that the software solution is not enough. Customers are very unhappy. They want the better and more expensive hardware solution. So, of course, now many analysts and also traders here in the trading halls are wondering whether today's profit warning of Volkswagen might not have been the last one.
Well, Conrad, at this point, I'll join you and say, thank God it's Friday and it's bye-bye to the third quarter. I hope to see you in the final quarter of the year. We'll move on now to the U.S., where the stock index futures pointed to a cautious mixed open on Friday morning as traders grappled with concerns about the new tax proposals. Markets are focusing on the tax reform plans and what will happen to them when they enter Congress. On the data front, Friday will see the U.S. report on personal income growth for August, which is expected to show growth of 0.2%, the Chicago Purchasing Managers Index for September, and the final reading of consumer sentiment will also be published. In the meantime, September 2017 was proved to be the one with the lowest volatility ever during a month that is known for being historically volatile. Now let's cross over to New York and talk to my colleague there, Jill Maladrino. Good morning, Jill. Well, I can say good afternoon because it's afternoon here.
Well, good morning to you.
Right.
It really has been amazing the way equity markets have been trading. U.S. stocks ended higher on Thursday with fresh record highs for the Dow Transports and Russell 2000 Index as the reflation trade, the topic du jour on Wall Street following the details of the Trump administration tax plan proposal. Dow component McDonald's led gains in the index following an analyst upgrade, while healthcare names also jumped as markets continued to hope President Trump will be able to make progress on tax reform. Small caps have seen the biggest beneficiaries of a tax reduction turning higher mid-session after trading lower in the early portion of the day. Note that the IWM, that's the ETF that reflects the Russell 2000 or the small cap index, was up 10% on Wednesday, and we continue to see that follow through. The S&P 500 was little change, rebounding from an early loss with healthcare again, materials and energy stocks adding to the most points to the index. Financials took a breather after returning gains of about 8% over the last 3 weeks. Overall gains have been tempered with equities at record highs and valuations elevated. The reflation trade has the dollar, bond yields, and small cap stocks all posting strong returns for the month. Recall that's the same group that outperformed last November after the promises were made after the election. Now, volatility, that remains non-existent as the VIX is met with selling pressure every time it sees a little push higher as traders, investors take any opportunity to pile back into stocks on any pullback, no matter how small amount.
Well, it's quite amazing how equity markets have been trading so far. Well, as the third quarter comes to a close, what would traders be watching for as 2017 now comes to a close?
Well, geopolitical issues, tax reform, and legislation in general out of Washington, D.C., holiday 2017 and how the retail sector will perform, and of course the Fed's December meeting regarding a rate hike decision and the process of unwinding the balance sheet. Now, despite all these uncertainties that are on the table, it really is baffling how well the markets have taken the news in stride, and traders seem to be holding their breath in terms of when the shoe will drop. Now, what catalyst will it be to get volatility back into the market? So many traders are shorting VIX and VIX-related products, and it will be interesting to see how that plays out. The question is, how long will things remain the same? And that's really anyone's guess at this point.
Well, I guess, Jill, if history is a guide, the going will continue to be good for stocks into the end of the year. Thank you very much for your time and enjoy the rest of the day. Move on now to Asia, where shares were mixed in Friday trade after the greenback gave back some gains overnight as markets digested prospects for U.S. tax reform. Markets in Asia also digested a raft of data out of Japan. Nikkei 225 shared 0.29% after the dollar rally paused overnight. Across the Korean Strait, the Kospi tacked on 0.53% as most manufacturing, retail and oil stocks posted gains. The Australian ASX 200 slid into the red as the session wore on, trading lower by 0.05% as gains in materials were offset by losses in energy names. Hong Kong's Hang Seng Index slipped 0.09%, while mainland markets made slight gains. The Shanghai Composite rose 0.27% and the Shenzhen Composite advanced 0.555%. And still on all the markets-related news back here in Africa, the Africa Export-Import Bank is set to list and trade its first 5,000 depository receipts at a $4.30 per paper on October the 4th. AfriExim says the private placement for its depository receipts was closed on September 26th with subscription far in excess of the $100 million minimum required to launch the program for listing on the stock exchange of Mauritius. AfriExim has the approval of the Mauritius exchange to list a total of 69.770 million depository receipts within 12 months. The Cairo-based Continental Trade Finance Institution has held roadshows in Africa, Europe, United States and the Middle East in the past 2 months, looking to sell a total of $300 million of special receipts backed by 6,977 Class D shares of the bank. An African budget airline, FastJet PLC, says it will raise not less than $44 million in part through a placing to fund expansion in South Africa and Mozambique. FastJet plans an accelerated book build to raise gross cash proceeds of $28 million and would sell 60 million shares to Solitaire Aviation Holdings Limited to raise $16.2 million. The company also said that it had entered into a brand license agreement with privately held Federal Airlines and Solentaire Aviation Mozambique. When we come back after the break, we'll look at Nigeria's debt market. Do stay with us.